Can you hear me all right?
Yeah. Yep. Can you hear me?
Yes.
Cool.
I am trying to hook up my laptop to the internet. At my in-laws.
All good, bro.
Uh, Hey, what, can we take like a 2-minute break real quick? I'm gonna run up and get the password.
I could start it because you don't come in for a little bit.
Okay.
All right, guys. So basics of day trading. I'm going to share this Google Doc with you guys right after the video. It's going to be right here. I'll link it to here so you can just click it, watch the video while I break it down. I like to use Google Docs. Jason likes to use Google Slides. I like more information. I like to put all my brain on this piece of paper so that you can always look back at it, review it as you go. Number one, though, is what is day trading? Day trading involves buying and selling stocks with the same day to profit from short term price movement. Here's the breakdown. This is what we wish day trading was: buy down here, sell up here. So buy low, sell high. We all wish it. We all wish trading was this easy, but it's not. What is the actual goal with day trading? Is not buy, sell, or buy low, sell high. We look for calculated opportunities within bigger moves. So these micro trades, when compounded, can lead to significant profits within holding for extended periods or incurring high risks. So we're not really looking to trade this full move and just buy low, sell high. We're looking to take calculated opportunities within this move that are very consistent and that we can master. So again, we're not trading this full move. We would be trading this part right here because that's the most consistent way to trade. We're looking for the overall bigger move. We're not just playing this whole entire move out. Outperform long term investing. So, day trading has the potential to generate active income and can outperform long term investing if done correctly. That's a big key. And we'll get into it in a little bit about finding your edge in day trading in order for it to work. And what is the difference between short term and long term day trading? So, day trading is focused on short gains. That's actually it's momentum day trading I have right here. Forgot to leave that out. But momentum trading is focused on short gains that stack up, while long term investing is shooting for big gains in a long period of time that can take 10, 20 years to become very successful at it. Also has less liquidity. Now, the goal, the more aggressive you are with price targets, the more important it is to focus on. So, focus on consistency. Consistency is the key when it comes to trading. Oh, Jason, you popping in there? Nice backdrop, dude.
Yeah, thanks, dude. It's new studio. Just made it.
Oh my gosh. But again, that's day trading. Now, how the stock market works, I think understanding this is a pretty big part for traders. It's pretty obvious. You got supply and demand. Stock prices rise when there are more buyers than sellers and fall when there are more sellers than buyers. It's pretty obvious to understand.
Can I interject? Pause here.
Yeah.
Can, okay. I don't know. Future reference. Is there like a virtual hand raise or something I can do not to cut you off?
Go ahead, Jason.
Um, okay. Pick me, pick me. So we had a talk about this in a one-on-one lesson. I think it's worth adding on
Mhm.
how the stock market works because everyone was like, volume, what does volume mean? How do you know if it's buy volume or sell volume? Technically, if it's volume, isn't there buyer and seller? And everyone just their mind was just like, what the heck is going on? Okay. So I want to do a little surface level lesson. We're not going over level two, we're not going over time and sales or anything crazy like that yet. What happens here is yes, when there's volume and the market moves, there is a buyer and there's a seller. So whenever the stock is increasing, technically there are people buying the stock and selling it at the same time. Now, what does that mean? All it simply means is if a stock increases, there are two types of people. There are makers of supply. They're creating the supply, also known as liquidity, that Noah's going to talk about in a second. And then there are takers of the supply or takers of liquidity. So there's makers and takers. Okay. So what happens is when a stock increases, there are more takers taking the liquidity off the table. Okay. When the stock is increasing. So say there's a bunch of people that want to sell. Say um, Anthony wants to sell his stock at $1, and then Murray wants to sell his stock at 110. Chris wants to sell his stock at 120. and no, and you guys will not change your price point until you get filled at that price point. Okay. For me, if I want to buy the stock and then I said, you know what, I don't care where I get filled. I want to buy at $1. I want to buy at 110. I want to buy at 120. So I just filled Anthony. I just filled um, Chris, and I don't know, and Murray. I think were the three examples I used. The point is, as a stock increases, you are taking liquidity off the table, making the stock price go up and up and up. The way to think about this is the stock market is like the world's greatest auction. Okay, so when someone's auctioning and you're like, okay, can I get 500, 500 here, 500 here? Okay, Mookie, 500 there. Deep six, you want 600? Can I get 650? Okay, you know, that is what's happening with the market. People are being auctioneers and they're auctioning off their stock. And if they're still willing to go up in price, so next thing you know, instead of 650, you gotta get 758. That's how the stock increases. Okay, so volume can be tricky, but the easiest way to describe it is there is a maker of liquidity and there's a taker. Someone is taking those shares off the table. So when you click buy market, what are you guys doing? Say you buy a stock. What are you guys doing? Are you taking the liquidity or are you making liquidity on the table? You're just typing. So click buy market 1,000 shares. This is an advanced concept here. You're taking exactly. So if you're saying I want to buy 1,000 shares in market, boop, you're taking that liquidity off the table. Now, if that doesn't make sense and I just confused you, don't worry. We're gonna go in depth on that on Thursday. Noah, you want to keep going?
Perfect. So, yeah, you got supply and demand, price action, volume, and liquidity. Kind of what Jason was talking about is what volume. Volume refers to how much a stock is traded, while liquidity measures how easily you can buy or sell without affecting the price. I guess Jason did a pretty good job at explaining that for all you guys. So we'll kind of go into the competitive edge because in trading, in order to be profitable, you have to have a competitive edge that is better or can really drive your win rate higher than all the other traders out there trying to be successful trading. So you have to have a competitive edge that makes your edge better than everyone else's. So the competitive edge that we have as a group is small cap focus, stocks with 1 to 10 million share float and a market cap under 200 million, generally moving up 20% or more. It depends on who you ask and what strategy we use is the percentage. Yes, Jason?
This is the only thing else I have to add for the rest of the lesson, I believe. But when we're talking about competitive edge, it is important to know only two numbers matter. Okay. Noah, would you mind if I share my screen real quick? This is the last thing I have for the lesson. Okay. So this is the fun thing. If you guys like numbers, this is the fun thing about trading here. Okay. So the two numbers that matter when it comes to having a statistical edge are what? That's you guys a question. The two numbers that matter. I'm on my laptop. That matter when it comes to having a statistical edge are what? Anyone know? We're gonna have to do some lessons, and I tell you what, Noah, as we should whoever answers the question right, we should do some tallies, and whoever has the most right at the end, like top 3 guys, get like some free merch or something.
Oh, that'd be fun.
That'd be cool. I gotta send some merch out anyway. One is entry price. Nope. So, nope. What are the two numbers in order of having a statistical edge that you need to track? R to R and win percentage. Thank you, Jimmy. The two numbers you guys need to track a statistical edge is your win percentage, R to R. Here's the cool thing. There was a gentleman that traded on the New York Stock Exchange. I never got a chance to meet him. He was dead before I got to her. Years ago, his strategy in his fund, much like Warren Buffett, would go in, he would try to liquidate these businesses, and the ones that you'd invest into, a lot of them would fail. Like, in fact, 90% of them would fail. If you guys know about venture capitalists, you also know The venture capitalists, what, less than 1% of the companies they invest into work? So their win percentage is literally 1% win percentage. But the reason why venture capitalists work is because that 1%, the risk reward is ridiculously high. So say a venture capitalist invests $1 million in 100 companies and only one of them succeeds. So they lost $1 million 99 times. But that 1% was worth $200 million. Therefore, they gained $100 million in profit with a 1% win percentage. Boom. Crazy, right? There's also funds that have 99% win percentages, okay? But the risk to reward is astronomically terrible. So their wins are very small and they win most of the time, and their losers are so big it wipes out majority of their gains. And I had two examples for you guys on funds that actually have statistical data to prove that they had a 10% win percentage and they made money. Point is,
Those
these are
two
the two
numbers
numbers
just
you need to
have to
focus
line
on.
up. Like I could throw that in there. Like you can't have a low win percentage and a horrible risk to reward. You're going to be an unprofitable trader. So to be a profitable trader, you have to have balance between those two.
Yep, yep. And you guys, if you when you guys start tracking your trades, this is the reason why we have you guys track your trades, is we can see this number. So I'm going to show you an example. The one I'm showing you, this is when I longed only. I longed only in this account. I did not short because I wanted to see what my statistical edge was. I had a 36% win rate. So a quarter, if you flipped it, was more accurate statistically than I was on stocks. That's embarrassing. But where I made money on my long account was look at my risk to reward. When I lost $800. When I won, I made an average of $2,000. Okay, so you can see I lost, 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 lost. Big win, lost, lost, big win. Point is, these two numbers matter. Now let's look at. Um, I still have to log my trades from the last few days. This is my account for the last month or two. I had $2,000 in profit on Friday, and I actually ended really green today. We're gonna go over it. My win percentage is a lot higher now. My win percentage is there's months or there's weeks where I'll have a 90+% win rate. Pete right now is having a 90+% win rate. He's killing it. But there's weeks where I'll have a 92% win rate off of 14 trades, which is crazy. But this is where this is where I need to improve. Look at my average win loss rate. Am I still making money? Absolutely. But the thing is, I need to have a stupid high win percentage in order to make money if I don't cut my losses. So the point is, you have to figure out how you can increase both of them. How can you have a sound win percentage and a sound average win loss trade so your profit factor is over one? If your profit factor is over one, profitable. If it's one, you break even. If it's below one, you lose money. So, case in point, these are the two numbers we're going to look at and we're going to dive into on week 4, week 7 with you guys.
Mm. Now, the next section we're going to be going over. You want me to share my screen again, Jason?
Risk to reward mean? What does risk to reward? Risk to reward means.
Here, I have a graph that shows it pretty good.
Okay.
So let's say you get into a stock right here, and let's say this is at $10. So $10 being right here, if it's a 1-to-1 risk to reward, we're risking $9.50 to make $10.50. That would be a 1-to-1 risk to reward. Jason, what was your risk to reward? Wasn't it a 1 in 3? Which means we're risking only 1 to make 3 times. What was your risk to reward, Jason?
What was on my TradeZella?
Yeah, that you're just showing.
It's the opposite. My reward was 1 and my risk was 2. So my losses were 2 times bigger than my winners.
So it'd be opposite of this. The green would be
it was the opposite.
The smaller, the red was the bigger.
Yep.
Which again, you could be profitable with this as long as you have a good win percentage. That's all it comes down to. Taking high quality.
The last thing I'll add is statistically, Tradeovate, or what's the biggest forex trading platform? Forex something. I don't trade forex. It's like super well known. What's the biggest forex trading platform out there, guys? Can you just name one in the chat? Anyway, so the biggest forex trading platform in the world, whatever one that is, if you got, it was a broker.
Broker.
It was a broker. Forex.com, I think it was, if that's a broker. Um, and they published and they made their trading data public. Turns out there was over between a million traders within 2 months. There was 100 million trades taken. Sorry, 1 month. So the average trader took 100 trades in 1 month. A lot of trades. Of those 100 million trades, 62% ended in a win. You're like, wow. So you mean to tell me that a majority of people win more than they lose? But the funny thing is, only 10% of people are profitable. How does it make sense? Because the R to R showed when they lost, it wiped out 3 of their wins. So the biggest problem in trading is not usually win percentage. Having a high win percentage can be easy, relatively speaking. What hurts traders is really the risk to reward. Because if you have a low risk reward like me, you have to do 78 to 80% win rate in order to be profitable. 80% win rate is not easy. It can be done. That's what I'm doing right now, and I'm having profitable months. But I can be so much more if I focus on my R to R. That's all I'd add.
Pete, do you have anything to add to that? Because you kind of came up here on stage.
I just want to add about like the Parashort does not have risk to reward. There is no risk and there is no set reward, and that's why I say that it's not for beginners. So I just wanted to. There are some setups that don't have risk or reward, and that's why I say it's not for beginners.
And that's why we're also teaching that at week 5?
Right, exactly. But as far as risk to reward goes, like I would for everyone here, like I would kind of cut down on the Parashorts and focus on other setups.
Agreed. I think as long as you can master those two numbers, though, is what determines if you're a profitable trader or not. You have to have a good balance of either. Like Jason said, you could have a 1% win rate and still be profitable if you have the correct risk to reward setup. What comes down to it for me is really like what made me kind of cross the line of becoming profitable was planning my trades before I entered. So I knew before I even entered the stock where my stop loss was, where my take profits were. Obviously, this was before the Parashort, like Pete was saying. You know, that one kind of doesn't. You're waiting more for signals and signs to take your profit or cut your loss. But again, I think planning your trade out before you even enter is one of the best things you can do as a beginner day trader. Obviously, there's sometimes you'll see Jason, myself, Pete enter and then plan it out because we see a good setup. We, do it quick in our head before we kind of explain it. But before you even enter, write down where's your take profit going to be? Where's your stop loss going to be? So that it takes out the emotion as well when you're in that trade because you already have your take profit and stop loss already mentally built in. So you're not going to be emotionally trading like, oh my gosh, should I stop out here? Should I stop out here? It kind of helps with that full process. But I think as long as you balance those two is one of the best things. And then the last one that I really want to talk about day trading that I feel like not many people talk about or they don't talk about enough is mindset and expectations in trading. I believe it's kind of like in a way trading's like baseball. It's 90% mental, 10% physically doing it. And that's why I created roles that I learned in baseball as far as the mental side, because you fail more than you succeed in baseball. It's just the name of the game. So I think, though, back to my whole main point, is the mindset is one of the hardest things to overcome as a trader. The first couple of years, I didn't even understand what a mindset in trading was. I had to develop discipline, patience, confidence, and really set realistic expectations because a lot of people get into day trading for the wrong reason where they think, oh my gosh, in 4 months, I'm going to be the best day trader out there and I'm going to be able to make a living off of it. That's just not going to happen. You have to set realistic expectations or else you're going to constantly be failing in your head because you're not reaching those places as fast as you expected. That's why I think setting straight realistic expectations of this is going to take a long time. If it was easy, everybody would be doing it and everyone would be a millionaire. But it's not. The only reason why 99% of traders fail is because they give up and quit. It's not because they lose all their money. It's not because they literally lost their house. They lost their wife or girlfriend broke up with them. Like, that's never the reason. It's never coming down because they lost all their money. It's they give up and they quit because they had unrealistic expectations. Pete or Jason, do you have anything to add to that?
I think I had unrealistic expectations when I first came into this. I lost $2,000. I put in $2,000. I built it to $3,000. I lost it all. Then my house burned down. I had a little investment property when I was 14. It burned down when I was 17, and I had an account to be over PDT. And I fully expected myself to take that account from zero to hero within a couple weeks. The biggest thing I've learned in 5 years of trading, and three of which I think this January will be my third year of full time trading. Yeah, wow. 30-year full time trading. The one thing I've learned is there's always opportunity tomorrow. And it took me a long time to realize this. I was a very FOMO driven guy. I felt like I needed to hit every single green trade and every single opportunity out there. And when I realized that the most profitable traders I know and I have actually had conversations with take less than 20 trades a year, which means they take an average of 1.5 trades, or just over 1.5 trades a month. The amount of patience that you see and the less amount of trades you take and the more patient you are on waiting on picture perfect entries so that you actually have a competitive edge, those are the people that make millions and millions and millions of dollars. That's why I'm not a huge fan of scalping. I feel like it leads to a lot of boredom trading. And that is one thing that I had to reel in for my mindset and expectations, is realizing if I force my hand here, I can actually set myself back even further. For example, if you start with $5,000, and because you want to turn that $5,000 to $50,000 within a week, you trade, and that $5,000 turns into zero, you're setting yourself back. Realizing that this is a long game, realizing that most good careers need at least 6 years of college degrees and hundreds of thousands of dollars. This is one of the highest income skills on the planet of Earth. There's people making millions of dollars doing this. Okay, just think about that. People want to pay hundreds of thousands of dollars to go to college, 6 years. And I know a lot of 6-year degrees that don't make a lot of money. And people want to take a few days and force the progress. We are doing a 6-week program so you guys get all the information up front, but we're still working with you guys for the entirety of the whole year. Don't undermine the power of time. My mentor told me, and this is the last thing I'll lead it with, people overestimate what they can complete in a year. People greatly underestimate what they can complete in 5. Think about where you were a year ago. Think about where you were 5 years ago. Flash forward that to 5 years ahead of time, where you can be. Where I was 5 years ago when I first started, absolutely insane. 5 years is not that long of a time. 5 years, I'll be 27. 5 years ago, I picked up this little thing called day trading, and now we have what we have. So just think of that when you're setting expectations in trading.
Yeah. One thing I will add to that is I still struggle to this, and you're going to constantly have a mental battle regardless of how many years you're in trading. There's going to be new battles that come up that you have to overcome. So as long as you can come back to the mindset and really just toning in the mindset of trading, you can overcome a lot of these battles. But the problem that I have currently, and I've had my whole time day trading, is I show up every day expecting to take a trade. And I know Jason says a really good thing is like, show up and try not to trade. Like, change the mindset. Like, show up and try to force yourself not to trade. I still struggle with that. I couldn't tell you the last day I had where I didn't take a trade, because I show up every day expecting to trade. And like, that's something, and I'm being completely transparent with you, is like, I struggle with that. And these are just small battles that we have to overcome as day traders. And day trading is not you show up for 2 hours a day and you move on. No, you show up and trade for 2 hours a day, but that doesn't count the journaling. That doesn't, the education. I'm still learning from Jason and Pete every single day that I'm trading. It's just the way it is. You're going to constantly be learning. Don't think you've ever made it. Like, there's always someone better than you that you can learn from. Always. Is there any questions that you have throughout the kind of me sharing my screen? I know I started off kind of a little slow and then we kind of heated up into it. So if there's anything at the very beginning that you want me to cover again, let me know. But Pete, you anything to add while we wait for any questions?
Yeah, so for me it was 3 years, 3 straight years of not being a profitable trader. So from probably like November 2012 until the end of 2015, I was not profitable. I was taking losses. But I think, Noah, you talked about it, about not quitting and studying and logging your trades and
Mhm.
finding what works for you and not quitting, because he's right. Most guys just quit. And if you just give up, of course you're never going to make it, right? But putting in the time and the effort, which is why Jason wants you to log your trades and to be serious about it, because it is like another job. And for me, and this might, help you guys, is to put rules in place that you know about yourself. So for me, it's really hard to be full-time day trader, right? Because I know that for myself, I'm like, oh, I got to make X amount of money to pay my mortgage or something, and that really messes with your mindset. And I know that about myself. So I know some of you are like, why is he still working? Why is he still, trying to do this or that? And that's why, because I know myself, right? And only you guys know yourselves. So being able to find those things can really help you a lot. Like even dropping my account to 50,000 at the beginning of every single month, and I use size as a reward, right? Like back in June, I was doing terrible, so I immediately cut my size, right? But then I started doing good, so the account showed it. If the account goes from 50 to 60, my buying power goes up. Now I can take a little more size. If my buying power goes back down, I'm forced to take less size. And it's just small things like that that can keep your mindset right.
Yeah, and another thing.
A lot of you guys might be thinking, well, I don't know what I struggle with yet. I'm just beginning. I don't know how to set those rules for myself. I don't know, all these things. Well, in week 3, we're gonna build our own custom journal. We're gonna be hands-on for a day. Yeah, we're doing crafts. Um, no, it's not like that. But I'm gonna have you guys put out a Google Doc, and throughout weeks 1 through 3, I really want you guys to um, consider taking some simulated trades. Okay, and I understand Hammer demo. They're going to give me an update tomorrow morning on the ETA and the fix, but they have already fixed a lot of stuff. So just write out where you would have entered and where you would have exited, and we're going to start to build out the things that we know we all struggle with, because all our struggles are different. Noah said he struggles with overtrading. Pete says he struggles with the aspect of needing to hit certain milestones, and if not, he struggles with that. Or having too much money in an account for
And Jason's just
oversizing.
perfect. He has no struggles.
I'm just, look at me. Do I even have to go that far? No, I just, um, there's tons and tons of issues that I obviously have, and the biggest one I have, and I just showed you guys in my journal, was my risk to reward. My risk to reward's not good right now, and the biggest issue is I've been sizing in too early, and I have not been practicing patience. I've been identifying picture perfect opportunities. I've been patient enough to wait for them. Then when it comes, I am too impatient to wait for the opportunity. So I enter in because I'm so excited. This is gonna make me lots of money, and it goes against my trade plan just a little bit. Um, and I'm deeply underwater. So everyone has their own issues. We're gonna work on that in week 3. Okay. So if you guys are like, I don't know what I struggle with, well, you're gonna find out.
Yeah, and one thing I
And you
want
know
to add
what?
is
Like we don't even care if you're demo trading. We don't care if you're trading and with a live account and you make $10, $20. We were all there. I just went back with Jason and I saw that my biggest win on the entire month was like $150, right? So like I don't care if it's demo trading. Just 2 years ago, I put myself back under PDT on purpose so that I would focus more on like taking the right setups. And there was a couple of times that I went back to a demo account because I was trading like crap. And there's nothing wrong with that. Like don't be embarrassed. Don't don't feel like that at all.
I
Because
think
I
the
still
reason
do
why
it if I
people
need
get
to.
like embarrassed from demo trading is because they see all the gurus out there that claim that they're profitable in their demo trading. But like at the same time, like you're not claiming to be a profitable day trader. Like there's a big difference. Demo trading is not something to be embarrassed about. We all started demo trading. And like one thing I want to add, like that I think this lesson is so important is that you get to see me, Jason, and Pete talk about our experiences as day traders and are sharing all the hard work it actually does take to be profitable. It's not easy. And this is just setting you up for these next 6 weeks because we're going to be diving in very, very heavy into these key strategies. So this lesson is all about setting your mindset and expectations. That's the whole thing around this lesson that I'm really seeing is like resetting your mindset and setting realistic expectations going into this. And I do want to answer a question that you had. I forget how exactly does. Okay, no. How did you manage the time with work and everything else before you got good? So I first started day trading with the 9 to 5, and where I ended up doing all of my research is laying in bed at night. We all get in bed and go on our phones, social media. We all either watch a TV show to go to bed. Like, why not set that time aside to educate yourself? It comes down to a lazy thing. If you really want to be successful at day trading, you're going to make time for it. I mean, you would make time for a Netflix series that's coming out that you like, or social media posts, looking over that. I mean, I think just setting time aside at night when you're not at work, you can give it your full attention and kind of learn that way. Um,
What it was for me was I would watch early on in my career. I would watch these gurus day in the life videos, and I would envision how cool that would be if that was my life. But I realized maybe those gurus are profitable, maybe they're not. Doesn't matter. The point is, I want that lifestyle that they're portraying, and so I have to be willing to put in the work. So I became so obsessed with the end goal of what it can provide, and that's why I go to coffee shops and trade, even if they're obnoxiously loud, or I'll go to Noah's and I'll go around doing all this and that. Is because I've always wanted the opportunity to make money. My biggest thing was I just want to make money anywhere in the world and be my own boss and be able to travel and make money on a laptop. That was my biggest thing. And so I just became so obsessed with Dream Outcome. The work didn't seem like work. I just felt like I'm building my life. I'm going to get there eventually. And that's how it worked out for me. It was just, I was so obsessed with Dream Outcome. I knew, you know, honestly, I don't think you can make it being a profitable trader. And the boys can tell me if I'm wrong or not, but I think you can't be anything short of obsessed with the dream outcome because
Yeah,
it
you
is
also
so
need to
easy to
enjoy
quit.
it too. Like when I was as a technician at a Volkswagen, I would bring my laptop every single day and I would set it up on my toolbox and I would have it open and I'd be working on a car, staring at the chart, right? Like Jason said, it's kind of an obsession, but it's also like you enjoy it, you love it. You know, you just
yeah,
can't
make it a
get away
hobby.
from it. Yeah. Even in the military, like my NCOs and the lieutenants, like they hated me because I would always pull out my phone and watch on the charts when I was learning. And they absolutely hated me. And I'm like, well, I just made $100. What about you?
That's funny.
Well, you just earned yourself 100 push-ups. Get down.
Yeah, right.
Oh.
But like that obsession, like even my wife sometimes she's like, okay, I went trading like back in the day. And I'm like, yeah, like I'm going to go trade. Now she loves it because
Yeah,
she can go
it's,
shopping, but
Yeah.
whatever.
All right.
yeah,
Any other
yeah.
questions that you guys have that could help you prepare for these upcoming weeks that are going to be diving in?
The,
Honestly, I think
the
Jason
last
and
thing
I
I
need to
want
go
to
on
add
another
when it comes
vacation to
to
vlog. I mean, it sounds like Jimmy, that's what got Jimmy hooked.
I agree. Also, my vacation in November got canceled because of due to the hurricane. So that's and Heidi wants to go on a cruise.
Ooh,
Anyway, um,
okay.
so the last thing I want to add is let's talk about winners. Okay, your big winners, my big winners, Pete's big winners, Noah's big winners are great. Okay, there was a time when I first started trading where my buddy came over to my house and yeah, I was this was COVID, so it wasn't really hard to be profitable in my opinion. I made $2,000 in a morning. He immediately wanted me to go spend said $2,000 on a very, very fancy pair of shoes that day. And I didn't. However, if he was the one that made it, he would have. And I want you guys to know, just because you have a win doesn't mean all that money is in the back of your pocket. I want you guys to look at your wins and go, that was nice, but you have to understand half of that, if not more than half, is going to pay for your next loss. Okay? That's an easy mindset thing that helped me keep myself level headed, not get too euphoric and go, I just made $10,000. Buy this, that, the other thing. I realized due to probability and due to my win percentage, I am probably going to lose half of this in my next few trades. But the difference I get to keep is mine. So having big winners is great. But you have to understand you have to stick to your numbers. And that's why we're so keen on tracking the 2 KPIs. Guys, what are the 2 KPIs again? Can someone tell me the 2 KPIs you need other than Jimmy? First one. RR and what's RE? Risk to reward and win loss percentage. There we go. Return maybe. Wait, exactly. There you go. Risk to reward and win loss percentage. That's why it's so important to track those numbers. I want you guys to be obsessed with those 2 numbers. Those numbers are gonna rule your next. Those 2 numbers are your GPA. Put it that way. Those of you guys in college. Those 2 numbers are your GPA for the next days. Okay. So Jamie said, or Jamie, sorry. Do you have to be right on in the charts and market at all times while trading to be profitable? I'm gonna let Pete answer this one.
Absolutely not. So my daily goal, I set it really low. My daily goal is $1,000. Okay. And if I make that 1,000 or more before the market even opens, I'm gone. I'm leaving. Or I don't take another trade and I just hang out with you guys because I've been doing that recently. But before I was with the PC team, I would be gone. Now, does that mean that there were some times where I had to sit around till noon because everything wasn't working with me? Like, no, there were those days. But I don't want to say set a goal like that, because then you're coming to the market like to make $1,000. But after a while, you'll start to, know yourself as a trader and you'll kind of set little goals like that. And there are some days where I don't take trades at all. And if it's a slow day, like sometimes I don't even turn on the computer. What was it? Wednesday or Thursday, there was nothing going on pre-market and I slept in a little bit and I showed up for market open and I only showed up just because to hang out with you guys. Right. So no, you don't have to sit there all day. Don't force anything because if you are sitting there all day and that's that whole mindset that we were talking about, obviously there's something going on in the background where you feel like you have to trade. Like I have to make $2,000 for mortgage or, I have to make this amount or that amount. And that's why, I always have that income on the side. And yeah, trading might be a little side hustle for now, but I mean, you could see that I have really good months, and that's what will come when you're not showing up to the market saying I have to make this amount. And we'll go over more of that in like the trading psychology part. Like if you have astronomical debt, and I was trying to train one of my buddies, teach him how to trade, and I always told him don't go and like get a loan or something. And he went out and he got a $30,000 loan just so that he would be above PDT. The next day he lost 10 grand. So, I can't stress that enough that like you don't have to make money that day. And if you start following just the setups and just like, oh, this one is presenting itself. This morning, for instance, like I had to leave and what was it? I don't even know what the ticker was today, but I opened up my phone and I looked at it and it was like 85%, 90%. And I was like, man, if this just has one more leg up, it's going to be 100%. That's in my wheelhouse. I could do a pair short on it. And that's exactly what I did. And what I left within 10 minutes of the stream. So no, you absolutely don't have to sit around all day. Maybe in the beginning to get some screen time. right? Because the screen time is really important too. You got to watch the charts, you got to learn. So I guess for my first 3 years, I was there as much as I could be, as much as my job would allow, because you need that screen time right now. You
Also, I
have to
hate
be
to say it,
watching.
but like at the same time, like that's what we're here, and that's why you're in a community, is because if something is presenting itself, like we have a ton of people in this community that'll shout it out, so you don't have to be glued to the chart because someone in our community is watching the charts at all time. I feel like.
Exactly. And like also,
And
go ahead, bro.
I was saying, statistically speaking, after 10:30, you guys usually see volume taper, and that's because most traders, like Pete, like myself, like Noah, head out, and that's why we end the stream at 10:30. Usually speaking, unlike today, it was like noon. Um, Point is, your win percentage actually will probably go down past a certain point because the rush hour of trading is over. The volume has decreased. So it's actually in your best interest to not stare at your screen all day and to not boredom trade, because kid you not, sitting at your screen the whole day and watching stocks, I find it almost impossible to not take a single trade. It's like watching paint dry. So it's actually in your best interest to stick around for the hottest hour of open and to have the rest of the day to to decompress. So it's actually, I think, is in my opinion, it's better to not be at your charts all day, because eventually you're gonna want to force a trade. And I've lost a lot of money sitting around past noon, 1 o'clock, 2 o'clock. I'm doing some
Me
work
too.
and I have my scanner open. Ooh, that looks nice. And I trade in and there's money.
Perfect.
So
Is that it? We
that's
wrapped
all I
up.
got. Tomorrow we are going to be going over, guys, this mastermind course in education. We're going to be sharing a 6-week schedule, so you guys know exactly what day we're going to be going over what. We're going to also put in there a link where you're going to find all the uploads for the 6-week program. So if you guys want to rewatch these lessons, you guys can.
Again, this one will be in
Or
the
if you
Google
missed
Doc
them,
as well. I'll throw it in the Google Doc so you can look at the notes and also watch the video. can you show us how you would set risk reward of 1 to 3 using numbers where we take profits and stop loss, etc.? That's going to be later in the week. We'll be doing that on order types, which I believe is Friday, because tomorrow, Thursday is order types.
Thursday, what's tomorrow?
Tomorrow's off day. Wednesdays are off
candlesticks.
day. Or candlesticks. Yep.
Yep. So tomorrow we're gonna be going over candlesticks. Obviously, you guys hopefully know how to read a basic candlestick. If not, no biggie. We're gonna go over that. But we're also going to be going over advanced concepts. So don't skip the basic lessons, because there's more to them than you guys think. We're building the foundation for you guys in this week. All the videos will be uploaded right in under education. You can see the trophy. It says Mastermind Course above Jay's journal. We are going to upload them there, either to a private YouTube link or a Google Drive or something. We're going to figure out the most the best method for it. And for the onboarding lesson, my audio wasn't picking up on my recording software, so I had to refilm it, and I will go ahead and post that up there for you guys.
Awesome.
Okay.
And I think by next year, we're going to have a lot of education videos of not just trading, but like budgeting, money management, things like that. Because like we were talking about with, the mindset, you got to get all that straight. Because if you're trading, you got 20,000 of debt on your shoulders, like your trades are going to reflect that. Trust me, I've been there. So like, there's going to be a lot more education videos coming that I believe all you guys are going to have access to, right, Jason? Just right off the bat.
Yeah.
So stay tuned for that.
We're gonna, since Pete is, Pete, what's your actual degree in?
Business administration with a concentration in finance.
in finance. So
And my
you know,
GPA was
if you guys
4.0.
know-
I can send it to you right now.
So we have a guy that, if you're like, well, what's your qualifications? Well, there you go. But alrighty, guys. Well, appreciate you guys. We will talk first thing tomorrow morning in our live stream, and then we will be talking about candlesticks next thing tomorrow night.
Awesome, guys. Thanks for joining.